day traders from across the globe, and welcome to the 1375th edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This 1375th installment of these educational videos is coming to you on a Monday night. Yes?
Yes.
For Trading Tuesday, September 22nd, 2015. We know that futures trading has become, and always has been, but now especially is extremely risky, causes substantial financial loss, is certainly not suitable for all traders. You must have risk capital to play with that you could burn without wanting to hang yourself in order to play this game. And remember, always put your stops in, and always put your stops in first. So what is on the board, traders? Exciting stuff. First of all, a double-sided OMNI for emini, S&P, and NASDAQ. Yes, we had a little bit of a rally on Monday. Yes, it looked exciting. It closed strong on the close Monday afternoon. Blah, blah, blah. You know why? Because a bear flag is a bear flag is a bear flag, and bear flags still exist, and they're still flying on the ES and NQ daily bar charts. We are not out of the woods. Omni will absolutely sell short and or go long E-mini S&P tomorrow, depending upon what sets up first. Personally, from looking at the charts and following formations, I say we end up on the short side before anything happens, but we shall see. So, three things on the board, very important things on the board. One, gold bugs. Finally, I get my day, I do believe. So, we have been selling gold at the OMNI Trading Academy almost exclusively since the price of $16.80. I don't know how long ago, a year and a half ago. We've had very few buy trades. We've been selling it, catching it right, selling it, catching it right. Every now and then we get it wrong, but mostly since the price of $16.80, $16.90, right up there, we have been selling gold and doing that correctly. Last week, we were selling gold all week. We had a one day where we got stopped out, and the gold bugs came out of the woodwork. So gold has gone up for a couple of days now. They're convinced it's going through the roof. I'm here to say we had a one-day loss. We sidestepped it. We are here to sell it to you tomorrow, most likely, depending upon the setup. You want it, gold bugs? Come to the Omniacs. We want to give it to you. Gold bugs, beware. That's what I'm telling you. You'll see it in the chart segment. Then we've got the bear flags are absolutely still flying, E-mini, S&P, and NASDAQ. And then there is this. Traders, the Wall Street Journal. A round of applause for the Wall Street Journal, and I'll tell you why. I have been putting out videos about the Dodd-Frank Act and what it will do to our bond and stock markets because the liquidity is no longer in the core of our market. And the Dodd-Frank rules basically took market makers out of the game, and without them, we've got an empty core in our markets. You've heard the videos. You've seen the examples. I think we're getting to someone in mainstream, because in Wall Street Journal this weekend, if investors bail, will your bond funds fail? Let me see. This, Investors Business, well, actually, Investors Business Daily on the back. I read all the newspapers, as you know, over the weekend, but as I'm plowing through Wall Street Journal, I happen to go and I'm reading through and I get to the business and finance section, and lo and behold, what do I find in the business and finance section? Something very interesting. If investors bail, will your bond fund fail? Traders, this is on the cover of the business and finance section of this weekend's Wall Street Journal. It basically discusses what I was telling you. What is going to happen when the funds start getting out of bonds, when the Fed raises rates? And it looks like they may be raising them at their next meeting. What's going to happen to these bond funds? So it's getting towards mainstream, baby. Yeah. Help me. Send videos to your senators. Send letters to your congressmen. Help me get the word out before the bear market in bonds comes. And boy, oh boy, it'll get ugly if we spike rates by selling short bonds. So, thank you, Wall Street Journal. Try to make the people in Washington, D.C. needs to hear this. D.C., listen up, right? Wall Street Journal's talking about it. I'm a peon. This is Wall Street Journal. Listen up. All right, so now I'd like to show you the charts. Traders, in these charts, you'll see why I say gold bugs beware. You'll see the bear flags in E-mini, S&P, and NASDAQ. With no further ado, let's go look at some charts. Traders, NASDAQ daily bar chart with the 200 bar moving average overlaid and the weird bear flag I've been showing you about in video after video. I told you the Omni would not be swayed, that Oscar would not be swayed. We knew that was a bear flag. And look at what has happened so far. It's come down to here. We've settled underneath the red line of the weird bear flag, below the 200 bar moving average. I am not getting happy with this market. In fact, we'd like to sell the rallies tomorrow, if possible, in the NASDAQ, although if it dips deep enough, we'll buy a dip, but I prefer to sell the rallies until we get away from this flag. We got to get away from this flag, or I am a seller of rallies. Next, emini S&P, no different, but the flag's not as weird, but no different. You couldn't get away from the top of the flag, came down through the bottom of it. You are below the 200 bar moving average. You've got to be selling rallies for now, gingerly selling big rallies tomorrow until the market changes complexion. You don't sell the first print out of the chute. You don't sell it here. You wait for a big rally and you sell big rallies, okay? That's what we have planned. Next. Gold bugs, beware! Gold bugs, here's another one of my Omni averages. It's not the Omni Otapma, but it's an average that I do use from time to time. And this is the gold daily bar. And look, you hit that average, you get above it for 1 day, down. 1 day, down. 1 day, down. Here you got above, you played a little bit for about 10 days and then back down again. 1 day above, down. 1 day above, starts its descent. Couldn't even get above. 1 day above, starts its descent. Here we are now. The gold bugs are claiming that this is the biggest rally the world has ever seen, and this little piece of the chart right here, because it went up for 2.5 days, means the price of gold's going to 5,000. For anyone that actually has a brain in their heads and doesn't just trade pure emotion, look at this. It's only gone up a teeny bit. It's been going down for a long time. It hit the average, and anyone that thinks that this is a little flag right here, yeah, think again, because this looked like a little flag. This looked like a little flag, just about the same one. They all look like little flags when they get up there, but that's not what they are. They seem to break when you get back down below the average. So we are sellers of gold with the red Omni for trading on Tuesday. Then there's this, copper, a leading metal, correct? Same average on copper, but copper has already retreated. Copper hit the average, retreated, retreated. That's what copper did since it hit the average. Look what it did last time it hit the average. So, same average, leading metal copper, just like you've seen in the gold, but has already begun retreating. Traders, pull your own charts, do your own analysis. I'll see you all at livewithoscar.com. So, traders, you've seen the chart. You've got my reasoning why we are not going gangbusters long in the emini S&P yet. That's for sure. We'd actually sell a big rally if we get one first. Gold bugs, beware. Listen, technical analysis is what we live by. Repetitive patterns is what we live by. That was a repetitive pattern. Let's see what we get. And once again, thank you, Wall Street Journal, for acknowledging the big liquidity problems we have in our markets. Again, in a bull market, it's meaningless. When we start to come down, the vacuum comes, the markets just fall apart. Most traders get off their chairs, don't touch their keyboards, and let the thing go. There are no market makers to stand in. The bonds will sell too. The funds will sell. The fund managers will sell. The people will sell. The speculators will sell. It's going to get ugly if it ever turns bearish. Let's get this Dodd-Frank Act, some little pieces of it, repealed so we can have market makers. With that in mind, one last thing. If you own a public stock company and you subscribe to my theory, and I believe it is absolute truth, I've been doing this long enough, that without liquidity, when the markets go down, your stock will get hammered. Why don't you open up a trading desk? They have told the banks they can't be market makers. They have not stopped you public stock companies from opening trading desks and creating liquidity. Get a whole bunch of market makers, put them at a desk and tell them you don't want to buy or sell or hold anything for profit. You want to get in and get out and create liquidity. Take it and sell it, and take it and sell it, and create liquidity. On the way down, now you bigger stocks can do this. You stocks with a lot of volume, you companies can easily open up trading desks. On the way down, your stocks will not tumble nearly as quickly as the stock companies who have no trading desks to create liquidity and no market makers to help them when the market does go down. Think about it. about it. If you are a CEO of one of these major companies with huge stock volume every day, open a trading desk, create your own market makers. It will help you basically be in charge of your own destiny when the bear market finally does come. That's about it, traders. I'll see you all at livewithoscar.com. Come on down and visit me in my free trading room. Remember, keep your emotions out of trading. One of the best things you can do with helping yourselves, keeping those emotions at bay, and it's not easy. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, I'll see you all at livewithoscar.com where I have some gold targets for you. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.